Let's do a case study on Weston and its fiscal second quarter 2026 earnings, which were reported on Friday. What we're going to do is we're going to provide a take on what occurred to help executives understand what to avoid and what could have been done differently to avoid a value destructive outcome. So let's get into the setup for the quarter. And the idea was that Weston reported a double beat at its fiscal second quarter earnings. They beat on revenue, beat on earnings. Now, the key here is that consensus was at the high end of the range for fiscal year 26. So investor expectations were high going into the quarter. Now, management decided to reaffirm this fiscal year 26 guidance. And then on the call, they talked down the guidance in prepared remarks and Q&A. Ultimately, this led to new consensus being below the midpoint of that reaffirmed guidance. And the result was a 26% drop in the stock price in a single day. So let's get into the key components of what went on here to help instruct executives on what to avoid in order to avoid a large value destructive event if they find themselves in this situation. First, let's look at guidance versus consensus. We had a fiscal 2Q26 beat plus a reaffirmation of guidance plus strong consensus. That is a value destruction event. Why? Because if you have strong consensus, that implies that you have to raise your guidance if you want to keep the stock price going up. At a minimum, what you need to do is narrow at the high end of the range. What does that mean? Your new guidance is the high end to the midpoint, the high end of your old guidance to the midpoint of your old guidance. That becomes the new guidance range, and you've essentially maintained or met the ability to keep the stock working. Now, the key issue here in this quarter is this idea of operating leverage. And when you look at the net sales and the adjusted EBITDA guidance ranges, they are $200 million in size each. Typically, there's not a one-to-one correlation, and it shows that there's a pricing power issue. And when you look historically, there used to be a 3x multiplier, 3x plus multiplier on revenue growth dollars to adjusted EBITDA in fiscal year 23. And today, it's only 1-to-1, which is illustrating all of the competitive pressure issues that they described on the conference call. So now let's get into this idea of messaging and market sentiment. And the key here for executives to watch for is consistency. In this case, Weston was inconsistent. Why? The Q&A conflicted with the press release. The press release reaffirmed guidance, but in the prepared remarks and the Q&A, the company kept talking numbers down, saying that we're going to be end closer to the midpoint of the adjusted EBITDA range, that there's an 8% volume growth and negative 8% price issue, and we tried to raise the dividend 3%. All of these things are in conflict with one another. They don't send the message that you intend to send to investors. And this leads us to the idea that the best outcome was to reset guidance completely. And the question is, why would you do that? Well, if you reset guidance and say, in this case, because of our pressures, we go with the original low end to the original midpoint and make that our guidance range, it removes a downside surprise of another guidance revision lower at fiscal third quarter. By reaffirming and pushing everyone below the midpoint, the risk that's going to continue is that through the third quarter and even fourth quarters that we're going to see guidance revisions lower, and it's only going to hurt the stock price. If you were able to narrow, create new guidance narrowing at the low end of that original range that you affirmed, you're going to be able to do a valuation reset on the fly and get investors back on the reservation quickly and suck in all the carnage to the immediate point in time and allow the stock to rebuild so that by the end of the year, you might be back to the $60 where you started the day and dropped to 45. So let's get into the key learnings. Consensus relative to the quarter results and guidance is the key. You have got to know where each of these components are and how they relate to each other, or you may cause a value destructive event. Second, reset when that consensus is too strong and it's misaligned with the business. If things are not aligned, take the opportunity to reset expectations. And then thirdly, always be consistent. Investors will always see through inconsistencies and penalize you for it. At the end of the day, guidance is what drives your valuation. You need to understand the interplay of the components of guidance, consensus, and your quarterly results if you want to drive valuation. Thanks for watching.